What's going on, YouTube? Welcome back to the Blackfire Technical Analysis YouTube channel. I am your host, Crypto Bro. We are back at it again with another edition of the daily live stream. Hello, hello, hello. We have plenty to cover. Again, I want to remind everybody that yes, while I am using the YouTube channel to provide educational and entertainment content, I'm also utilizing this YouTube channel as a psychological journey. Psychological journal. So that I can not only document my fuck-ups, essentially, on paper, but I can get them on video log as well. I can come back to the YouTube channel. I can come back to my live streams. I can gauge and understand the psychology behind where I fucked up. I definitely fucked up yesterday. I made some. Not some. The rest of my trades were per the rule book. The market didn't play in my favor yesterday. Yes, I closed in the green. I profited. I did not close in the red. So technically, yes, it was a good day. Consistently profitable is the goal, but it could have been a lot less damaging and a lot more profitable than it was. So definitely we're going to take the time today to document the errors, especially the biggest error that almost cost me a very large portion of my account. And we're going to cover where I got lucky. Because yesterday there was a little bit of luck thrown in the mix. So we'll cover the bulk analysis real quick, get a general understanding of what's going on in the market, and then we'll go ahead and break down the trades from yesterday. I'm hoping I'm live. It says I'm live. I'm going to assume that I'm live. Try to go live for a couple of live trades yesterday. I think my last three. Yeah, my last three, which wouldn't have mattered anyway, because, you know, anybody that chooses to trade the way that I'm trading actually would have traded in the red for the last three trades. But again, ultimately, end of the day, I went, 1, 2, 3, 4, 5, 6, 7, 8. I went 3 for 8. Yesterday was a poor day. to say the least. Yesterday was a poor day, and it started off very, very, very emotionally terrifying. And again, that's why I'm here. I want to document my emotions. Yesterday, I was fucking terrified. I was absolutely terrified with one of my trades, but we will get to that here very shortly. First things first, ladies and gentlemen, we're going to hit up this bulk analysis. I'm going to keep the music to a dull roar here, just in case. My kid's in the other room. He's in his bedroom sleeping right now, and he's been out for almost 2.5 hours, so I'm expecting him to arise at some specific point. And if he does, unfortunately, I'm either going to make the decision to kill the stream or let the stream roll. Let the stream roll, right? So here we are. Here we are. Let's get her going, ladies and gentlemen. We're going to take a look at NASDAQ here. Confirming below the 21 exponential yesterday. Looking at a 21 exponential 55 cross. Definitely doesn't look the healthiest. We are finding a little bit of action on this support level here at 11,500 bucks. Wouldn't be out of the question to see it pop up back above 11,660. Which is, again, directly correlated with the 21. Now, the question is, do we still have the potential for an uptrend? Yeah, I still think we have the potential for an uptrend. These lows here could be inconsequential lows. And what do I mean by that, right? We have our major low here. As far as this trend is concerned, right? Not the macro, just this micro trend concerned. We do have a major low here. I'm going to redraw that. There we go. We do have our major low here. We have ourselves higher highs. Could we classify this as a higher low? I would say, oh, that look at how accurate I am. That was terrible, Brian. What the fuck? Technically speaking, yes, we could hit this region at 11,500, hold it as support, breach back above the 21 exponential, and continue the trend towards that diagonal trend line of resistance here. Yes, that is possible. What is also possible is price action hits the 21 exponential, rejects, confirms a lower high, and sees continuation all the way down to the daily lows. Again, those major lows right around 10,715. Now, what are the conditions I'm looking for here? First things first, stochastics breaching the 50 read here, definitely showing signs of momentum weakness, at least from the bullish perspective, showing some weakness here. We do have slightly expanding volatility as price action breaks to the downside. Not the greatest signal if you are, bullishly biased right now. And RSI, what is RSI doing? Breaching the 50 read, confirming lower lows, and forcing a closure below the exponential. We do have RSI confirmed below the exponential right now, and the exponential is in a negative slope. We could be looking at a top formation again. I'm not saying it has to play out that way. Not at all. This could be a trap. It could be a trap. But again, momentum oscillators are speaking specific volumes to me that says, hey, there is a likelihood of this, continuing the pullback, continuing the bear market, and continuing to crash lower. First things first, though, what conditions am I looking for in order to confirm this? First condition I looked for was rejection of the diagonal trend line of resistance. Now, obviously, we didn't specifically meet that region per se, but close enough is close enough. If we do see continuation below 11,500, I'll be looking for the next level at 11,250, and that's where I'm going to be a little more biased towards continuation, towards, again, 10,700 bucks to the current lows. Again, and if those conditions are met, I will be ultimately looking for continuation to new macro lows. And again, from this perspective, we have two major support and resistance levels here. Currently major support is 10,700 bucks. Any opening closure below there, yes, I will look for bounces along the region, bounces along like 10,300, maybe 10,000 even, but ultimately I'm going to be looking for the next major level, which is all the way down at 97.70 here. Big implications for big moves to the downside. I wonder what the weekly looks like. What does the weekly look like? Weekly looks like it wants to top out. Weekly momentum still decent, showing signs of weakness for sure, but it still looks somewhat decent. RSI not looking as decent, looking like it wants to reject the 50 read here again on the weekly time frame. Again, I want to see how price action plays out. Again, I am trading the 15-minute chart, so if we do see continuation to the downside, I'm likely going to take trades in that direction for quick 1%, 2% profits here. But as far as the macro time frame perspective is concerned, I am still very bearish, and the same is said for SPY futures here. Again, this one actually meeting the diagonal trend line of resistance, confirming a change of behavior, and basically resting on the 55, currently still holding support above 39.40. Take it with a grain of salt, right? Prepare for everything, expect nothing. It's a weird looking glass, ain't it? It's my water glass. So for this one, same thing. Yes, we do technically still have an uptrend. Technically. We have a small change of behavior by confirming lower lows below the last local low at 39.60. We saw breaches below there. We see confirmation below the 21, and right now we're fighting to hold support. If I see this support break, I'm going to be looking for the next level, which is, I'd say 3,800 bucks. I would say 3,800 bucks just to give it rough math. Come on now. Yeah, I'd say anywhere between 38.10 and 38.20 is where I would be looking for price action to go ahead and move towards here. But again, the trend is being threatened right now. We did meet this diagonal trend line of resistance for the third time on SPY futures. Again, from a macro perspective, let me get my brush. Easy peasy, lemon squeezy. Lemon squeezy, easy peasy. Is this the third drive? Third drive, break, third drive dump, right? That's the big question. Are we going to dump or are we going to recover and see some actual bullish momentum? Now, we all know that my sentiment doesn't change as far as the bearish market is concerned until we absolutely see open and closures above 43.15 here. Actually, we'll do the wick high. We'll say 43.30, just to be more, again, on the conservative side. I want to see closures above the wick high, vastly above the diagonal trend line of death and destruction here for this bear market, before I am convinced at all whatsoever that we are going to see a bullish breakout. For now, we met that resistance, dumped below that resistance, fighting with current support. If we do hold this support, yeah, I would be looking for another stab towards that diagonal trend line, which is current resistance around 4,100 bucks. But until I see open and closures above that, I'm looking to the downside. If we do see open and closures above 4,100 bucks, I will immediately look for the next level, right around 4,200 bucks. And then we can start talking about the possibilities of testing that macro structural lower high or the last swing high, which is a lower high in the structure, all the way back here at 43.30. Only then can we talk about that. For now, we're still below. We're still pressuring support. Closures below support. I will look for moves, again, all the way down to 3,800 bucks. Stochastics putting in lower lows, breaching the 50 read on a critical signal. Confirmation candle closure below that 21 exponential here. Boom. Not looking healthy. Volatility is expanding. BBWP is expanding to the upside as price action collapses to the downside. Another not so bullish signal. RSI still not the greatest, but still not the worst. This one actually looks better than NASDAQ at the current. Except the trend has been defiled. Defiling the trend. That's a band name right there. Right there. Defiling the trend. A metal band for traders. Defiling the trend. This one, defiling the trend. Pushing towards that 50 read here. Back below the exponential. Forcing the exponential to a negative slope. Free money. I always click the ads on Brave. It gives you free crypto. Plain and simple. Fuck you. 50 read is holding support right now. The question is, will it remain? Right? Will it remain? And again, dictating with price action. I'm going to be watching support. I'm going to be watching the green 55. I'm going to be watching the current support, seeing if it holds or fails. I wonder if today will be another slow trading day. That is the question. When you break it down to 15-minute candlestick formations, you got yourself a lot of plays to be had, even with a candle, even with a candle like this. Like on the 5th, which actually I think the 5th was a profitable day for us. 12.5 was a profitable day. 12.6 was a profitable day. So again, my bias is technically to the downside. I will be looking for downside moves. But again, if we hold support, bounce back up, wouldn't be out of the question to see reversal, higher low structure in this formation. Again, we do have a trend. The trend is your friend until the very end of the trend, and the trend, in my opinion, is not to an end unless we close below 37.20 spot 75. Technically speaking, again, the trend has been defiled. But did we take out, the major low? Nah, not really. Not really. Again, so anything can happen. I'm going to be watching this price action very closely. New York Stock Exchange here. This one actually performing differently. This one actually did test the structural lower high. Looking still pretty weak. Could be putting in a double top formation. And if confirmed, I will be looking for massive continuation to the downside. So what are we looking at here? Currently, price action for this one is fucking around with that 21. Looking like it wants to go ahead and test below the 21 here. Still holding support. Again, anything can happen. We could put in a higher low right here and blast to new highs, which would be, in a sense, a very bullish signal. Or we could see open and closures below this 21, which would likely push price action back down below the diagonal trend line of resistance, confirming a double top, and likely seeing continuation all the way back down. Stochastics looking very similar, but not as much. Breaching the critical threshold, testing the bottom side of that bullish control zone. I want to see if price action, again, if price action confirms a candle closure below the 21 in confluence with stochastics breaching the bullish control zone, I think we have ourselves a major continuation to the downside. Again, I'm not saying that it has to play out that way. This is not financial advice. I'm not a financial advisor, but my speculative opinion on this market is if we do confirm that major signal, as well as confirming below the 50 read here, For RSI, we likely see this act as a double top formation for New York Stock Exchange, and we likely see price action dive all the way back down, likely to lower lows. Again, right now I'm looking for macro bear market continuation or the end of bear market continuation. And right now, the evidence suggests we likely are topped out right here, unless proven otherwise. Again, proof otherwise would be holding support at the 21. Bouncing at least at a bare minimum back above yesterday's wick high at 15,495. I do believe it is 15,499 spot 0039. Closures above there likely signal a low formation on RSI, and I would look for an immediate retest of the $15,900 top. Open and closures above that, I would immediately look for bullish continuation. I would look for the New York Stock Exchange to be inherently bullish with a macro change of behavior, again, above the last swing top, which is a lower swing top. And I would look for immediate continuation, a big boom to like 16,850, which is a big move. Big move. So ultimately, are we looking at big potential moves? Yes. On all of these charts, historical volatility percentile is absolutely crushed, which is suggesting big moves, not directionally implied, are likely to arrive very soon. Again, I did mention the directional implication with volatility and price action slightly, only because, again, we are seeing price action. Did I just get a message on Discord? I did not. I'm be working with my partner today, another one of my media partners. Just a little news update. I'm sorry to pause the analysis. Just a little news update for you guys. I will be working with my media partner here today. We are going to. I guess I'm not as tech savvy as I thought I was. I'm pretty fucking tech savvy, but tech savvy as far as consoles are concerned. This is my first computer in my entire life. I had a fucking $200 laptop in college that wasn't meant for anything but fucking watching YouTube. So apparently you can transfer your live stream into the Discord. That's what we're going to plan to do. I don't know how to do that yet. My business partner is going to help me. My media partner is going to help me figure that out today, so that hopefully by 9 a.m. I will have a live stream going. And for the first time, again, yesterday's stream for some reason didn't go through. I tried to stream the last 3 trades that I took for the day. Didn't work out, apparently. I looked on YouTube. My stream's not even there. We're having some internet issues. Me and my trading partner are both having internet issues, so hopefully we can figure out that today, and we can get the stream on Discord. So I'll let you guys know, keep you informed. Check it out. It's going to be live stream. You're going to see my trades live in action. Back to it. I didn't get the message. Back to it. I was talking about historical volatility percentile. Yes, on all 3 charts, historical volatility is expanding to the upside currently. Again, not in the most dramatic fashion. Actually, this one's back down. Volatility is back down on this one. Not in the most dramatic fashion, but again, if we do see continuation to the downside while volatility expands, we likely have our directional implication. Again, volatility does not imply directional movements, but if you get expansion in the direction of the movement, then it can be applied, in my opinion, right? If we see massive expansion on volatility as price action gets destroyed to the downside, we likely have our directional implication, right? I'm missing something here. All right, so that's going to do that for that. I'm going to look at dollar index here again. I am more geared towards the traditional stock market right now because I can't short play crypto. Unfortunately, I can't short play crypto. I will take a look at crypto, just Bitcoin though. Again, I can't short crypto anymore. I'm trading on the Webull platform. I can short on the Webull platform with traditional stocks. I can do whatever I want with traditional stocks on the Webull platform. I can't even manage fucking risk on crypto. So for the time being, ladies and gentlemen, the crypto analysis will be very lacking, to be quite real with you. Unless it's requested. unless requested. Then I will knock out that crypto analysis. Dollar index rejecting the red 9 exponential here. Rejecting resistance. I will be looking for continuation to the current lows. Any open and closure below 104.50. I will look for the next level at 103.65 and more. The only thing that convinces me otherwise would be an immediate closure back above 105.60 here to retest the previous lower high at 108.81. My mentality for this structure does not change unless at a bare minimum I see a closure above 106.80. Until that condition is met, I am inherently bearish, especially with a macro change of behavior on the daily time frame. Looking for rejection. Weekly is definitely looking topped out as well. Testing that 55 right now, not looking like it's a strong test currently. Momentum oscillators on the weekly time frame are absolutely crushed right now. RSI is below the 50 read on the weekly. It looking like it wants to recover, but again, below the exponential, vastly below the exponential. And again, when it comes to moving averages here, I take them very seriously. Very, very negative slope on the weekly time frame for the exponential. Stochastics is absolutely crushed to the downside. Volatility is expanding on the weekly time frame as price action collapses. There is no evidence suggesting that this downside run, in my opinion, is over just yet. So as far as the daily time frame, the daily time frame actually looks like, from a momentum perspective, that it could go up a little bit. We'll have to wait and see on that. Stochastics and RSI are crossing up currently in some pretty low territories. This one's in the bearish neutral territory. Again, not looking the strongest RSI. Still has a very flatlined exponential, but stochastics here starting to pick up a little bit of speed. I want to see what happens with price action here. Volatility is collapsing, so we could see some sideways consolidation between the current range. We could classify this as a range. We have the bottom side support at 104.50 and the top side resistance at 105.65. We could see price action bounce between that region here. 4-hour time frame. Consolidation. Yeah, it's ranging. I mean, it's ranging. And again, when it comes to ranges are just like trends. Range is a range until the end of the range. And again, very, very, very well-defined support and resistance levels here. Any breach above or below either one of them, we likely have our next move, right? So that's kind of how I'm looking at the US dollar index. We're going to go ahead and move on to my fucking trades. Trade number 1. I'm going to be real with you. I tried something very dangerous yesterday. I tried something very dangerous, something I will never attempt again. Never. Promise you, fucking never. I will never try this shit again. Never. It's a new rule. Already wrote in my rule book. Pre-market for CVNA. Absolutely dived. Absolutely dived. To like my buy point. CVNA, I entered here. Yeah, top open. I bought the open for spot 45 on CVNA. Now we'll go to the 15-minute time frame and you can get a perspective of what the fuck actually happened. Now it might not look like much on the chart, ladies and gentlemen, but let me tell you, these 3 candles were massive. Entry point at 445. I bought the open. Could have taken profit real quickly for 5%. Didn't. I was down 20%. Before I could do anything, this candle here wicked down. And I panicked. Right? I let my emotions get in the way. And I panicked. Saw this one recover a little bit because we opened here, pumped up, and then we opened here, pumped up, and died. Right? So in the span of 30 minutes, I was down 7.5%. the span of 15 minutes. Again, I bought the open. The open went wild. I was excited. I was like, oh shit, we might hit it. You know, 'cause, again, I was trying to buy a bounce. That's essentially what I was trying to do. I was trying to buy because, again, on market open, price action was down like 35%. I was like, oh god damn, this one's gonna bounce. I'm gonna buy it. Damn, I got a notification about my YouTube channel just now. Cool. What was I saying? Yeah, I was gonna basically say, I basically said, oh shit, down 35%. There's no way this doesn't bounce, right? Except it didn't. It went down 20 more percent. What the fuck? It went down 20 more percent. Now, while I did have an emotional freak out because I was down fucking $4,000 by this point on a $20,000 position, I just said fuck it. It's got to bounce at some point, right? It's got to bounce at some point. That's what I was telling myself. Yesterday on this one specific trade, 99% of it was hope. Oh no, 50% of it was hope, and 45% of it was luck, and 45% and just 5% of it was letting the position play. I got lucky. I actually went from a negative $4,000 loss to, where was my exit? 460. To a 3.25% gain. So that profit, again, entry was $445, exit was $460. I profited $672.60, and that one took an hour and a half. Not so good. MPC was my next trade. Let's go find it. MPC was my next trade. Where did I get in on MPC? MPC was at 110.08. Yep, I went long on this one. Again, another mistake that I made. 110.08. I thought this was a directional pullback. 110.08. I was like, damn, this is going to be a good entry. Price action is going to revert and go up. Continue to at least this region here. This is where I got in, and again, it immediately went down. MPC actually hit my stop loss before I could kill the position, which was all the way down here at 108.29. Yep, I put my stop loss on that support, hit that support, bingo, bango, boom, boom, I'm out. Again, could have waited. In hindsight, could have waited. Could have opened the risk, but again, this is the full, this was my full risk management. Oh yeah, 1.6%. That's all I was willing to lose. I wasn't willing to lose any more than that. Shit happens. Sometimes you take losses, and again, I really never would have gotten into the positive. Yeah, I could have mitigated my losses a lot more. I actually could have almost broke even here. But with moves like this, sometimes you lose. Sometimes you fucking lose. It is what it is. Again, not every edge is going to play out to your favor. Not every trade is going to play out to your favor. That's just life. VLO was profitable. VLO was actually the saving grace for the day. Which again, in hindsight, I could have. No, not in hindsight. I profited. There is no hindsight. VLO entry was 119.31. Yep, bought this red candle. Same thing I did with what's its nuts? MPC. Take profit was at 121.30, which was a stab above the green 55, which was aligned with this horizontal. Took profit there. 332.33. That trade took 30 minutes. Maybe 45 minutes after entry, I took profits on that. But again, I could have made more plays, but on the CVNA play, again, I was down $4,000. My emotions were heavy. I'm used to losing $200, $300 on trades. Being able to open up a stop loss, but on CVNA, I didn't even have time to put in my stop loss before I was down 10%. And once I was down 10%, I was like, I can't close the position, down fucking $1,500, $2,000. I'm gonna let it ride. And then ultimately, I was down fucking four grand. And then I was like, please fucking bounce, please bounce, and it bounced. I got lucky. That shit was luck, pure luck. That $672 profit on CVNA, I promise you, honestly, and transparently, it was luck. Because it could have easily just kept diving down, as it did bouncing. Lesson learned. I'm never just buying a candle on the open ever again. That shit will never fucking fly. Never. I will never do that shit again. Now, if I would have shorted, I would have been like, oh, goddamn, there's $4,000 profit. I'd have been fucking high horse in it right now. But I made a mistake. I didn't even have an edge. And I thought, oh, I'm going to buy it and it's going to bounce. Dumbass. But while that was happening, this one took some profit. This one took $332.33 profit. Netflix took a loss there. That one, again, this Netflix is a perfect example of when an edge fails. An edge that failed. Again, just because you have an edge does not mean you're guaranteed a win. You're not guaranteed a W just because you have a clean edge. Not at all. If I can fucking find Netflix. Where you at, you son of a bitch? Did I remove Netflix? I might have removed Netflix. I did remove Netflix. I didn't. Oh, well, I guess I didn't. Netflix currently breaking out. You son of a bitch. Netflix, again, 15-minute time frame. Saw breach below support. Short, immediate reversal. Right here. It took 15 minutes to lose on this trade. Actually, it took 30 because I put my stop loss at the next resistance. So, yeah, it took 30 minutes. My entry was here at 303.23. I went short on this one, looking for the next support here, which again would have been profitable. Hindsight would have been profitable. Breach support, edge was there, edge did not hold. I lost about 1.5%, or 1.25%. Netflix total loss was 247.68. AMD was a loss. Again, I lost on most of my trades yesterday. AMD was a loss. AMD. Why did I trade AMD? 70.79. That's right. I was trading a breakout. At least I thought I was trading a breakout. 70.79. Yep, I entered here. Hindsight, again, yes, I could have closed the position in profit. Didn't. 70.79. It was only, 0.4%. I was actually going for like the green 55 for 0.75%. Didn't quite make it that far. And again, you can see it on the chart. Instant reversal. This one hitting my stuff. No, I think I killed this position after we confirmed a cross of the red 9 exponential below the 21. This candle here, I think, 70.40. Yep, 70.40 is where I closed. As soon as I saw this candle, diving down below the 21 here, I was like, yeah, I'm just gonna chop it. I also had a little bit of a trend line going here, and once I saw that trend line get defeated, I was like, yeah, that's cap. Gonna go ahead and mitigate the losses on that one. Nvidia, luckily, was a win. This was a last-minute ditch effort to try to bring my fucking P&L into the positive, or at least keep it in the positive here. Took Nvidia. I think I was playing a breakout of resistance. I think. Where did I enter? 160.95. Yeah, that's again just a bad choice, right? Just a bad choice. I mean, again, you can't be perfect, ladies and gentlemen. Again, and this is my my first month. This is only my second week doing this full time as a quote unquote professional. Shit happens, right? You live, you learn, you adjust, you adapt, you overcome, you make changes to your strategy. You make changes to when you're gonna, kill the profit. Take the lot. You're gonna make changes. You're gonna adapt. You're gonna overcome. And this is just another example of, I should have known not to buy this. I should have fucking known. Not again. I did get out in a profit. I made $61.39, but at the same time, this is a trade I should have never taken. Period. 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 So I bought in here and got out 161.45. I got out here 0.3%. Not that much profit. Hindsight, right? Hindsight. I did have an edge. Didn't play out as well as I thought it was going to play out. Oh, I got a comment. Hoggy G, Grand Rising. Do you use any other time frame? What is your opinion on the 5 minute? Okay. That's a good question. That's a good question. My boy Reggie in the house. What's going on? Okay, so when I was watching NVIDIA, I was paying attention to the 5 minute time frame because when you break down the 5 minute time frame here, the trend, this is the only reason why I stuck with NVIDIA on this trade. Again, yes, in hindsight, the entry was absolutely garbage. Again, I will be honest with you guys. I will tell you if I made a shit fucking call every time I made a shit fucking call, and I made a shit fucking call on this trade. But in hindsight, I did have a trend. Trend identification was good on the 5 minute time frame. I am trading the 15 minute, so the 5 minute has to have some kind of relevancy here, and it did. The trend, played out, kept playing out, kept playing out. I watched this 5 minute trend here. Now, am I taking edges on the 5 minute? Absolutely not. Absolutely not. I'm not taking edges on the 5 minute. But if I want to break down the structure to see how it's really performing, again, since we're trading the 15 minute time frame here, sometimes I do have to backtrack to the 5 minute and say, you know what, maybe the 5 minute is going to give me more confidence. And on this one, it did. Even though a lot of bearish divergence played out, it still held as far as the trend is concerned, and I got lucky enough to escape with about $60 in profit. So yeah, the 5 minute is relevant as far as breaking down the analysis of my 15 minute time frame perspective a little bit more. But do I take edges on the 5 minute time frame? Negative. I have not chosen to trade the 5 minute. I have chosen to trade the 15 minute. But again, when it comes to risk management and maybe, profit taking, and maybe getting out when you probably should be getting out, the 5 minute time frame can give you specific signals of, hey, maybe this is an early warning signal to get out. Like on the 5 minute time frame here, if I would have saw the red 9 exponential cross the 21 here, I probably would have killed the position right then and there, because you're looking at evidence that suggests the end of trend continuation. However, we hit that trend line support level here at 160.25, supported it, boom, came back up. I was able to take profit, and the rest is history. And that's NVIDIA. SQ was a loss. Fucking SQ. Pain in the ass. I actually think I took a decent signal on this one. No, I didn't. At least I don't think I did. Actually, I think I may have. What was I? I think I was trying something. What was I trying? Let's find out. Where was my entry point on SQ? 61.64. Yeah, that's what I was trying. I had candle body support right here. Candle body resistance right here at 61.35, and a candle body support right here. So yeah, this range was looking a little tight again, and that was one of the mistakes I made on this trade here, is that the range was wider, right? This is where the 5 minute time frame comes into play, because if you open up the 5 minute, you're like, oh, the range is actually a lot bigger than this. A lot bigger. I can actually delete that right now. A lot bigger, right? The range is actually greater on the 15 minute time frame perspective. Yeah, I may still have taken the trade from this perspective, to be honest with you. I may still have, and I probably would have gotten hurt more. Realistically, I got hurt probably the same. But I had my, my range top here. I was like, oh shit, we have, a breakout candle. Let's fucking trade it on the red. I traded on the red. What did I get in? 61, 64, 61. Actually, I got in high. 61, 64. And you guys can see how the trade played out from there. It didn't go in my favor. Actually made the decision to close it, I think, here. 61.39. Yeah, I had a sense. We hit that first pass of the green 55, got rejected. I was like, this trade's not going to play. I killed it for less than $100 of a loss, 81 bucks. And then Mara, I thought I was going to get a last-ditch effort at a positive trade on Mara. Again, same thing. Saw breakout candlestick formation here. I was like, oh shit, boom, boom, boom. Momentum was rising, volatility was rising, RSI was rising, everything was on the uptick. And I was like, all right, let's take the trade. I put in the trade at 538, I think, 539, and I was looking for 545. I was literally looking for a quick pump to the upside, 539 to 545, 1.22% to close the day. That would have made my overall P&L a lot better. Didn't play out that way. Put my stop loss 2% below my entry. I lost $111.30. At the end of the day, my profit and loss total was 192.98. Rounded up, 193 bucks. Not the greatest trading day, but still, again, came out in the green and made more than I made in 8 hours at my job. So there's that. Again, hindsight, perspective. Made some bad calls yesterday. Made some bad plays. Definitely let my emotions, cloud my judgment just a little bit, just enough to, turn a potentially amazing day into a fucking disaster. And again, it could have been even more of a disaster. CVNA, that I still look at this, man. I was literally in shock. I remember I walked out of my office, and my wife, I guess she was like, "Man, you're like pasty white." Because when I walked out of my office, I was $3,500 in the hole at the time. 35. I think it was this candle here where I had to walk the fuck away because I was legit getting pissed off, and I'm like, I can't. It's not the market's fault. It's my fucking fault, right? So I was more angry at myself. And she's like, "What's wrong? And I'm like, I don't want to. She's like, "You want to talk about it?" I was like, "I don't want to talk about it. I have to go back in." I grabbed some water, went back into my office, and then an hour later. Thank the universe. The universe was looking out for me that day. Pumped right back up. Hit my take profit zone at 460. Got out with $672 in profit. So that trade right there was actually a disaster that turned into the saving grace for the day. I ended in the green yesterday because of that move. Hindsight's always 20/20, ladies and gentlemen. Hindsight's always 20/20. I will be looking to set up some more decent positions today. That's where we're going to wrap it because I do have some work to do before the end of pre-market and before the live stream. I'm going to look for some trade setups today. Again, if I don't get any, I don't know if I can trade, but if I do get some trade setups, I will be going live. I will be working again with my media partner to try to get the live stream on the Discord platform as well. That way you guys can, comment and chat and talk technical analysis and talk trading all you want during the live stream in the Discord platform. We're gonna more or less attempt to move all efforts towards the Discord. As far as like you guys commenting and asking questions and requesting analysis, only because it's more reactive. I don't have to wait for a delay. You guys can just go to the Discord, chat in the Discord while I'm streaming, drop comments, yada yada, and it'll be like that. Oh my God. I asked about the sub charts yesterday. I was referring to the indicators at the bottom of your chart. Subcharts, indicators at the bottom of my chart. So we got relative strength index, RSI. I'm gonna try to. What's the word for it? Simplify. That's the word I'm looking for. I'm gonna try to simplify this. RSI is a price action reactive indicator. It is directly correlated with the strength of a move. And I say that because we could take a 15-minute time frame perspective, for example. this little pump here, this little tiny top right here, right? It's very similar to how price action looks. So RSI is more reactive to price action, but it is a strength of momentum indicator. It tells you the strength of a move to the upside, to the downside. It also identifies bullish divergence, bearish divergence, hidden bullish divergence, and hidden bearish divergence, aka the red and green or red and blue arrows. It also identifies my tops and my bottoms for me. It's a beautiful indicator. This one, if you're on TradingView and you're using RSI, you likely won't be able to get the one that I have. The one that I have, I purchased from my mentor, who has a guy named The Caretaker that builds his own indicators. That guy happened to build the RSI. That's why it's called The Caretaker RSI. But without the arrows and stuff, it essentially works in similar fashion. But with this one, what I don't have to do is identify bearish or bullish divergence. It does it for me. I don't have to identify tops or bottoms. It does it for me. It takes a little bit of the work out of my analysis. The next one we have is stochastics here, which is a smoother based momentum oscillator here. This one doesn't react to each individual candlestick formation, rather to the actual overall average of momentum. So we'll give you an example here. This last move up right here on CVNA, right? This one right here, it measured the momentum, right? And what's cool about stochastics is that you can use stochastics to differentiate the actuality of momentum. You can tell if momentum is real or not, right? We see stochastics on this low call here, right? We got a nice low call here, and we get a nice upswing in momentum, right? Or wrong. We get a blast off with stochastics. But look, price action puts in a lower high. So was it real momentum or was it bullshit? I would say bullshit. Let's see if this one identified bearish divergence. No, it did not. While you're there, let's talk about what bullish and bearish divergence is. Bullish divergence is when price action puts in lower lows, but momentum oscillators put in higher lows, which I need to find an example because I don't see. This point to this point. Oh shit, you guys. I hear my kid. That's gonna do it. My kid takes precedence. If you guys want more technical analysis, technical indicators, technical questions, studies, blah 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 blah, come check us out at 9 a.m. We will be going live. We will be doing live trades today, depending on the setups that I identify. And I hate to cut you short, my brother, but I do have to go. My kid's crying. I have to take care of him. I'll dive deeper into your questions. The last one is historical volatility percentile. BBWP is historical volatility percentile. This measures the violence based on volume of the movement in the market, right? If volatility is expanding to the red, that means big moves either to the upside or to the downside, not directionally implied. When volatility collapses, you're likely getting a cool down, maybe some consolidation, maybe some kind of setup for another move. And that's going to do it today, ladies and gentlemen. Until 9 a.m. I will talk to y'all later. You already know what it is. Stay safe. Stay happy.